Oh, dude, is it on now? Yeah. Is it live? Oh, shoot. What's going on, everyone? My name is Chris Channa, and you are on the #1 channel for senior care entrepreneurs. And today we're talking about the SBA 7A loan versus the SBA 504 loan, which are two great products that could help you start your very own adult daycare business. So, should we get started? But first, what do you gotta do? Come on now, show a little love, give us a little like, or a little comment, or subscribe, or do all three. That would make my entire day. Just do it for me. I think I just rhymed. Bust the rhymes. Anyways, guys, all right, so we're talking about the SBA 7A versus the SBA 504. What is the difference? We're not gonna dive super deep on it, but we're gonna give just a general overview, kind of help you guys understand what the difference is, you know? Because sometimes all these loan programs and how do I start up, how do I afford to start my own business, afford to start my own adult daycare center, like these are all questions that I'm sure many of you are asking and probably trying to figure out like how do people do it. So that being said, there are these two wonderful loan programs for small businesses. And first we'll kind of go through them like just side by side on like the loan amount. Both the SBA 7A and the SBA 504, you could borrow up to $5 million. Now there are cases with the SBA 504 that if you're doing, you know, some sort of green certification or green certified business or building, or if it involves equipment that's got some sort of green certification, there's some ways that you can actually qualify for a higher loan amount, but it's gonna depend on the bank and it's gonna depend on certain eligibility requirements. But as a general rule of thumb, these loans are intended to help out the small business owner get started. So they're not meant for the big corporations. These are meant for the mom and pops, the local small businesses trying to get, you know, off the ground. So that being said, you are kind of limited to about a $5 million cap. Now the cool part is that when it comes to what can you use this loan money for, this is really where the biggest difference between an SBA 7A loan and a 504 loan come into play, is really on the use case. A lot of both of these loans are similar, but it's usually the use, what do you use these proceeds for, is where you're gonna find the biggest difference. And the cool part about the SBA 7A loan is that you can actually use those proceeds not just for purchasing equipment and purchasing fixed assets, but you could use it to purchase another business. You could use it for working capital needs. You could use it to restructure your debt. If you got a lot of like high interest rate loans, this could be a way that you can consolidate and restructure that debt. So it is nice because you can use it for things that are like that, you know, like even to expand your business. You could potentially like, you know, take on that SBA 7A loan to expand or grow your business into new markets if you wanted to. What's cool about that is it gives you a lot more flexibility. Whereas on the SBA 504 side of things, you're using that loan to like purchase fixed assets, things like, you know, a building, land, you know, the expansion of the building, not necessarily the business, but the building. If you needed to like add 10,000 square feet and you needed, you know, additional money to construct that 10,000 square foot space, the SBA 504 program would be great for that. If you need to buy equipment, and the cool part is like you could buy like new equipment if it has longevity to it. You can buy new equipment and finance it for like almost up to 20 years, you know, depending on the type of equipment it is and the lifespan that it has. You know, but these are things that are like, you know, make that SBA 504 program a little bit different than the 7A, is that you can't use it for things like working capital because it needs to be a fixed asset. There's an actual piece of property or a piece of equipment that is tied to it, not just, you know, to pay payroll or for working capital or for advertising and marketing and things like that. So the terms, when you're you know, applying for the SBA 7A loan, if you are, say, leasing an adult daycare space, okay? So you're opening up an adult daycare, you know, space inside of a retail plaza, then you're gonna be limited to the length of your loan or the term. You're gonna be limited to either the length of your lease, or if you were, say, like as part of a franchise, you're gonna be limited to the length of the franchise agreement. So it's gonna depend a lot on the lease as well as the franchise agreement as to like how like for instance, if your lease was only 5 years, then you're only gonna be able to get a loan for 5 years. But if your lease was like maybe say for 5 years with a 5-year option, which would total 10 years, then then something like that, you could qualify for a 10-year loan or a 10-year term for your loan. If you are purchasing a piece of real estate and you're funding both the business and the real estate, you can actually combine that loan into one loan, and you can purchase both the business and the real estate, and you can get additional help for, you know, working capital and things like that. And so you would be able to do that and then combine it into a 25-year loan because there's a real estate component to it. However, you would have to make sure that that piece of real estate you purchase, that you're gonna occupy at least 51% of the space for your own purposes. So that would be an important factor to consider when you're, you know, moving forward and using something like the SBA 7A loan. Whereas with the SBA 504 loan, you're purchasing a fixed asset, right? So it is, you know, for the most part, going to have a longer term, a piece of real estate or equipment that, say you're buying new equipment, you know, and it's to manufacture something, or you're in the manufacturing business, and that equipment can last, you know, 20, 30, 40 years. You know, you can actually finance that new equipment over a 20-year period. Now, when it comes to the rate, the interest rate, right? One of the things that you're going to notice that there might be a difference between the SBA 7A versus the 504 is that the SBA 7A loan is a variable rate, meaning it's always changing and adjusting depending on what the prime rate is. And so usually there's like the Wall Street prime rate, and I think right now, you know, obviously this could change, but just to give you an example, right now the prime rate is like 3.25%. So you're gonna have the prime rate plus the bank's, you know, rate, which is like 2%. So you're basically, your interest payment would be 5.25%, you know, assuming that the prime rate has not changed. If the prime rate adjusts up, you know, say 2.5 basis points, then it's gonna basically go from 3.25 to 3.5. If it were to do that, then what would happen is your loan would go from 5.25% to 5.5%. If the rate came down from 3.25 down to, like, say 2.5, your loan, your interest rate would then at that point in time be the 2.5 plus the 2%, so a total of 4.5%. So that variable rate mortgage will depend all on the prime rate. Whereas the SBA 504 loan, you can get a fixed rate because, again, it's all tied to the assets of the business. So in a lot of cases there, you might be able to identify a fixed rate amount. It would just stay that during the length of that loan. So that's some of the differences there on the rate side of things. You know, when it comes to fees, there's gonna be a higher SBA guarantee fee on an SBA 7A loan because they are financing, you know, things such as working capital. And they're financing things that don't have necessarily tangible value to them. And because they're doing that, there's gonna be a higher guarantee fee. So you're gonna see about a 2 to a 3.5% guarantee fee. And that fee doesn't necessarily include the, like, closing costs and the doc stamps and all the other stuff. This is just literally for, like, the SBA you know, fee, which is the SBA guarantee fee, and that is gonna be different, like the percentages differ depending on the loan amount. Whereas like the SBA 504 loan, the fees are gonna be a little bit less, you know, traditionally like closer to that 2% range. And of course, these things may change over time. This is just kind of like where things are today. But that being said, your, you know, SBA fee there is gonna be a little bit lower on that 504 program. You know, and traditionally that's just because there's just a little bit less risk because you're financing an asset as opposed to financing, you know, working capital and things like that. The cool part about both of these loan programs is that you can actually, you know, qualify for both an SBA 7A and an SBA 504 loan for as little as 10%. I mean, that is insane. I mean, it's like, it's hard enough to, you know, qualify for a conventional mortgage with less than 20 or 30%. So the fact that you can actually go and purchase a piece of real estate or start a business and you only need to come up with 10% is pretty impressive. Now, of course, that is gonna be highly dependent on your credit score, the bank's risk and their comfort levels. And there's a lot of things that kind of determine whether or not, you know, like how the bank's gonna view that risk. They may, yeah, the minimum that they can put down would be, say, 10%, or they would have to at least put down 10%. The bank themselves though may say, you know what, we don't feel comfortable, we want at least 15 or 20. So each bank might be different. Even though the SBA rules are set like this, the bank at the end of the day is still going to be the one administering this loan. They're still going to be the one that's going to be pre-qualifying and helping someone go through the process to obtain this loan. And you're going to notice that some banks are going to be comfortable with these loans and issuing these loans and specific to certain industries, whereas other banks might be, like you might have one bank that doesn't touch healthcare, but they do manufacturing facilities. You might have another bank that likes service-based industries, but they maybe only do franchises. You know, like every single bank is going to be entirely different. So it's important that you develop relationships with banks that are interested in, lending money in the space that you're in that same industry. And if that is the case, like in the healthcare field, right? If you find a bank that likes things like, say, assisted living facilities or residential assisted living facilities, that bank already knows kind of like what the process is like to go through, getting licensed and just the change of maybe ownership if you're purchasing an existing assisted living facility or if you're going to be starting a new one. And because of that, the bank's going to be more open and have a better appetite for things like, say, adult daycare. Whereas if you go to a bank that maybe has only ever like lent SBA loans out to people that have like, Burger Kings or McDonald's or Taco Bell's or things like that, or like tropical smoothies, like where their comfort level is in the food services industry, but they've never touched healthcare, they may not want to do those loans because they're unfamiliar with how they're unfamiliar with how those businesses work, how they operate, what types of hurdles they might have to overcome from a licensing and zoning and permitting standpoint. So a lot of times, banks you'll find might all offer and do different things, even though they're basically just kind of administrators through, utilizing these same programs. They might layer some of their own rules and restrictions on top of those loans, or they might only stay in certain industries. So you'll find that out a lot. So I always suggest is when you're going to meet with a bank, find out, do they offer both the SBA 7A or the 504? Which one's going to serve your interest best? In most cases, if you're looking to open up an adult daycare business, you're primarily going to probably fall in the category of the SBA 7A loan because you're going to be leasing a space. And if you're leasing a space, then the SBA 504 loan may not apply as much. If you're purchasing a building, then that's when this one might come into play. Or say you have enough money to cover working capital and some of those other expenses that you're gonna like or that you'd like to do, and you're really just trying to like get a loan for fixed assets, then maybe the SBA 504, is the right loan. Or maybe you're just trying to purchase a piece of property and you're like, I'll use my own money or my own, say 401k or whatever, to fund some of the other things like working capital and getting started up and all the other costs that go into it, but I'll use the SBA 504 loan to purchase that piece of real estate that I'm gonna put my adult daycare in. So even though this one is still a possibility, it might be less common, whereas the SBA 7A loan is gonna be much more common because it's gonna allow you to walk into, say, like a Publix plaza or a retail plaza and actually open a business inside of that plaza where you could get the funds to not only lease the space, but to build it out and to help with working capital as you open that new space. So that being said, guys, I hope this was helpful. Again, I know this was not a super deep dive into the subject, but at least it should help you understand the difference of these two loans. So as you're going through this process and you're trying to figure out, hey, how do I get funds to start up? How does this work? Because you might go into it and realize, oh my gosh, this is way more than I ever thought, or it costs way more than I ever thought. Here's some practical places to start and to actually be able to get your business off the ground, because both these programs are fantastic and could work well for you. I know when I first started, I used a lot of credit cards and a lot of high interest debt, and it sucked. And it was like short term, like 2, 3, 4, and 5-year notes, 9, 10, and 11% interest. If I would have known more about these programs back in the day, oh my gosh, it would have changed everything. But the reality of it is that I didn't, and now that I do, and now that I've utilized it both as the borrower and also as someone who has sold a business in healthcare and been through the process with the other side of it, where the individual that purchased our business actually got this same SBA 7A loan, and seeing how that worked for them was amazing. And it really helps people, even like yourself, say you start this adult daycare business and then one day you want to sell it and move on to something else, or one day you decided to retire, you could sell your business to someone that could qualify for this loan. And now you don't have to worry about like, I'm never gonna find anybody that has enough money to purchase this outright. Well, you could still get cashed out today without you ever having to hold your own note, knowing that a program like this exists, and knowing that that could be the way that someone could purchase your business. So that being said, guys, I hope this was helpful. Thank you all so much for joining me on the #1 channel for, we're going to say adult daycare entrepreneurs, because that's what we are here, guys. Like, I'm so incredibly just thankful for this community that's coming together, and all the people across the entire country that literally are super passionate about adult day services, and they want to make a difference in that field. It is so cool to see, and literally like this channel continuing to grow and the Facebook group continuing to grow and all of these things, like it's amazing, and it's because of you, and I can't thank y'all enough. So I look forward to the future of adult daycare and the impact it's gonna have on our seniors. We'll see you on the next one. Thanks, peace. Hey guys, thank you so much for joining me. If you'd like to learn how to open your own adult daycare center, go to adcpro.com. If you'd like the latest business tips, click here, and make sure you subscribe to our channel, click here. We'll see you guys next time.